Hi, Wednesday morning, it's early, just got done my workout, hump day, ready for, I guess, the weekend, but wait, it's month end, I forgot, Michelle's back, I have to get ready for my video. All right, how do I do this real quick? Here we go, now I'm ready. So, the last couple weeks we talked about, can big tech continue us on this path? Can earnings continue to help us? But it does not look that way. Stay tuned, we'll talk about this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links to today's video. Also, if you find this video of value and are looking for a different opinion that of Wall Street and Big TV, please do consider subscribing. First up, the numbers ending 7/31. As you see here, the anchors have been tech and smalls, although we have seen a little bit of cracks there. We'll talk about that in a second. But overall, it has been strong up to this point. Sectors, pretty consistent. Tech, consumer discretion, and health has seen a big push. Let's go to the big charts. Okay, first up, we've been showing this for a while. We've gotten our breakout. Looks like we might be testing it again. We'll see. That breakout came with very little volume. If you look there at the bottom of the chart, we actually had a surge in volume as we started to sell. But a little bit deeper look here, different chart. Let's start at the bottom. Volatility has been pretty good, about 12, which is nice. Next up, momentum. You see a little bit of a crossover, not surprising right now. And at the top, relative strength, which is starting to break down as well. Despite that, short-term signals are positive. Next up, continue to hold that 15-16 support on the weekly chart. Midterm signals positive. As you would guess, monthly chart looks good. Long-term signal positive as well. Next, let's go to the big talk on technology. Here's your NASDAQ. Big breakdown last week, down about 3.5–4%. This is NASDAQ 100. This is what we purchase for clients. So a couple things here. At the bottom, you see the momentum turnover. At top, relative strength has really weakened. So both of those look concerning right now. So what exactly is happening? Well, the disruptors are no longer disrupting. I think you've gotten to the point where you've hit a saturation point, and what they talk about are subscribers, right? Or new users, and that is what's happening. They're changing their future guidance, so some of these disruptors need to find other ways to make money. So, what have we done about it right now? What we've done is we've tried to reduce company risk, but have kept sector risk. What do I mean by that? We have taken profits on all the individual holdings on big tech names, but we've held the sector at this point. So we're still overweight tech, so we've reduced company risk, but we're still in technology right now, which has been the driver. The big question I've gotten in my travels last week as I was seeing clients up in Pennsylvania, one, what are you going to do if we see a correction? We'll get to that. But is this the beginning of a shift? So let's take a look. Here's a new chart. Value relative to the S&P. Now, going top to bottom, you can see how the value, okay, has really underperformed. Zoom in the 15-16 time frame, which was our last meaningful correction, and value outperformed. And then, boom, value has been dead the last 18 months since really the election. And you can see that drop off. Looks like we've hit a bottom, and we've had a bump up. Let's see what happens here. But I'm not ready to call the shift yet. Next up, let's go to international. Well, here you go. I've been talking about this. There's your death cross on the end of the chart there. Momentum has been pointing up, but I think you're going to have a lot of resistance at the 200-day moving average. Emerging markets, that's the BRICS, Brazil, Russia, India, China, Spain, Okay, you see the death cross here, a little bit of move up, not as strong as the EFA. But one of the things, if you have not seen, I did a video a couple weeks ago where I refuted one of the big talking heads that you don't have to own emerging markets all the time, because right now we are not there. Next up, don't forget our Wealth and Wisdom viewers, we have a special deal for a financial plan. If you are not in our area, it can all be done through the web and web calls. There's a link below. Finishing this up, U.S. equities, 10 of 10 in an uptrend. So U.S. equities continue to be strong. International, up from 5, but just 10 of 53 in an uptrend. So as a sector or an area, international is still very much down. Next up, tweets of the week. Here's a new one from Wall Street Dropout. I feel that way. Not that I dropped out, but I quit Wall Street and started my own firm. So here, like the housing market before in 08, everyone knows this is unsustainable. What? Take a look. Debt. The biggest of all is China, which has entered into a bear market. Reading an article this morning, they're really starting to feel the effects of the tariffs. So that is a scary chart. Next, we have Danielle Martino Booth. We've talked about her in the past. Great book, Fed Up. Great read. We'll have a link below. What did GD report won't tell you about the economy? Something is amiss in corporate America. Please take a look. I have a link below. Real good article. Next up, can't pronounce his name. He's from Germany. Just started following him a couple weeks ago. Really puts out great charts on the international European markets. And here he shows the ECB balance sheet. So we're starting to reduce, and now the ECB's hit an all-time high on their balance sheet. So high, it's 41.2% of GDP, where US has gotten down to 21%. Next up, Treasury spreads. Been talking about this. 10-year minus 2-year, that's what we call spreads. It has come up a little bit from 0.24 to 0.32. You kind of see the long end coming up. Not overly surprising, but still very low. The concern is if we invert, go below to 0, we know that in past that has shown signs of recession. More to follow on that. Next, what's on my radar? Okay, so I have a couple things here. The first one, new chart, commodity index. Now, not all commodities are the same. Obviously, gold, silver are dogs right now. But as a group, we're looking at oil, wheat, corn, all that do well in recessionary periods. So are looking at that right now. Next, utilities. We've been out of utilities for some time now, have had a nice surge. Now, utilities is a sector that does well when the market isn't. So that's why we're really watching this. We talked about the shift. We're not there yet. I think you've got big time resistance, which you see on the chart here at the end. Okay, if it can break out of there, that's going to tell us two things. It'll be a nice buy, and the market may not be going in the right direction. Next, what keeps me up at night? Well, lots of things, paying for college, my son leaving next month, but that's another story. Here we have the rising dollar is weighing on corporate earnings. So we did not see a lot of it during earnings, but we're hearing during these calls that it is going to affect future earnings, the rising dollar, and of course, tariffs. So that's something to continue to watch. Next one, really good article here. The market is dealing with something it's never seen before, and this has Jamie Dimon worried. It also has me worried. I've talked about this in the past. So let's take a look what he's talking about. Well, where the ECB continues to rise their balance sheet, we are reducing. Now, you look at this chart, it doesn't look it, but shows the flood of liquidity, right? QE, quantitative easing, that's what it was. The Fed flooded the market with liquidity, cheap money, and that helped the market surge. I could put the S&P there. Since they've stopped, the market has done what? Gone sideways. So looking at this, it doesn't look that extreme. So let's bring in the 1-year chart, and you can really see how they're starting to reduce the balance sheet. Now, if I go and put the S&P, I tried to line it up, very difficult. Maybe I should, next month or next time I do a chart, I'll try and put these two together. But each time they sell, take a look. The market goes up, rolls over. Up, rolls over. What happened last week at the end of the month? Up, rolls over. Coincidence? I think not. Wrapping things up. Fear and greed. 66, up from 64. Greed is out there. All indicators, once again, are positive. Short-term, mid-term, long-term. As always, thanks for watching. Michael Loftus, Wealth and Wisdom TV.